Hey, my name's James Nicholson and welcome to my YouTube channel. This is a new series that we've been doing weekly where we go out and we find what are the best interest rates. Well, not interest rates as such, mortgage rates. Slightly different because it's the rate that you can borrow at. Interesting week this week. All of the deals are different compared to last week. So very interesting. Either they're new lenders or it's actually looks like it's got more expensive in a lot of places. So it's really important to make sure you're picking the right lender, because if you don't, you want to get a deal secured now. And then even if you have a deal that expires at the end of this year, you could start the process early, get a deal fixed. If rates improve in that time, switch on to that better deal before you complete. But if deals get worse, you'll be locked in at this lower rate. That's what I've been saying a lot in videos over the last 2 weeks. So do consider that, because there is a lot of volatility in the market at the moment. Rates went down in December. They went down in January, but February, March, they've started creeping back up. Now, as always, if you haven't subscribed to the channel, make sure you do it over there, over that side even. It's back to front on this. Smash that subscribe button and hit the bell notification. We want to get 50,000 subscribers this year. Can you help us get there? And smash the like button. Go on, smash or tickle. Do something to the like button over there. That really helps us with the YouTube algorithm. Every view that we get is down to you guys hitting that like button. So thank you to everyone that does that. So let's look at, we're going to look in this video at different types of mortgages. We're going to look at HMO mortgages. We're going to look at buy-to-let mortgages in your personal name, buy-to-let mortgages in a limited company name, and residential mortgages as well. So this one, the first slide here, is an HMO mortgage, and HMO stands for House of Multiple Occupancy, just in case you were unsure. And so this is where you rent a property out on a room-by-room basis. Now, last week, one of the better deals was with someone called Fleet. Now, Mortgage Works have got a slightly better deal here. So, Mortgage Works have got two deals on offer. They've got a 5-year deal, which is just under 5%. Often with HMO mortgages, you pay slightly more than the market average because they feel you're more risky and they know you're making more money as well, so they want to get a bit of that themselves. So the Mortgage Works have got a 5-year rate. It's 4.99. There is a 3% fee on that, but they will lend 75% loan to value, which is pretty good. There's a 2-year deal, which is slightly more expensive, 5.19. Again, 3% fees on that. So not a bad deal at all. And Mortgage Works is a big lender. They're part of Nationwide. I use them a lot for buy-to-lets. So I would recommend, if you want to do some HMO stuff or you're remortgaging an HMO, go and check out the Mortgage Works deals at the moment. Now, buy-to-let. This is a buy-to-let in a limited company. The rates are the same. Often the HMO mortgages are slightly more expensive. This is a buy-to-let in a limited company. Now, often a limited company, the same as with HMOs, I don't know why, there's no real reason for it, but they charge you more. Rates for limited companies are always slightly more. I guess it's because they see that you can make more profit in the limited company because you can tax deduct stuff. There's not so many lenders as well, so it's not as competitive as some of the other stuff. So a 5-year deal is 4.99 with 3%. 2-year deal is 5.19 with a 3% deal. Both on a 75% loan to value. In fact, Mortgage Works actually do a 20%, an 80% loan to value, meaning you just need a 20% deposit. So that's another option that you could look at with those guys as well. Next, this is a buy-to-let in your personal name. And so a lot of people have buy-to-lets in their personal names. I've got the majority of my buy-to-lets in my personal name because I started doing buy-to-lets before limited companies were a thing. You didn't get taxed like you do now. You didn't have the Section 24 taxes that you do now. So there's two lenders here. So NatWest are the best deal for 5 years. And you can see, this is the last one was a buy-to-let. The best deal was 4.99. This is a buy-to-let. The best deal is 4.44. So it's cheaper than in a limited company, but obviously it's less tax efficient. Fees are flat. So there's a flat fee of $9.95. I prefer that, to be honest. I think that's a better way to do it. I wish more lenders would do it like that. And so I think that's a fairly competitive fee. 75% loan to value, which is just standard buy-to-let. The 2-year deal is with Yorkshire Building Society. They're quite a big lender as well. They do a lot of buy-to-let stuff. And they've got a best deal at 4.65. Now, these are definitely worse than they were a month ago. So a month ago, I got a deal in a personal name buy-to-let with the mortgage works, and it was 3.99. So we're about 0.5% worse than we were last month. So it has been quite a big shift in that. And that is going to, because you're paying interest only on a buy-to-let, it will make a big difference to your monthly payments as well. It'll be about 50 quid extra if you're borrowing around about 100 grand. So, yeah, not great. Let's look at residential now. And so residential, again, 2 lenders here are competing for your business. Last week, this was both HSBC. Sorry, no, it wasn't. Last week was both Barclays were the best deal. Barclays have dropped out on the 5-year deal, and HSBC have been more competitive on that. It's 4.39% with £999 fees. Not too bad. I think that's a fairly decent rate myself. And the 2-year deal is with Barclays. That's at 4.59% with £899 in fees, so slightly cheaper on the fees front. So, look, what I've noticed this week is rates have gone up. I think this week you're looking at 0.1%, 0.2% up for a week with a lot of these lenders, which is not really what we want to see. There's not much talk about anything going up again for now, but what I would always recommend, and I've been saying this again and again and again, just so this really is clear, if you have a mortgage that's going to expire at some point this year, you need to get on to your lender now and see what the rates are. What you can do, as long as you're within 6 months of that deal going through, you can get a rate agreed today. So you could go to HSBC, if that was your lender, you could agree 4.39%. And then in the 6 months that you've got while you're waiting for that deal to close, while you're finishing off your old rate, which is probably better, if a new rate comes out that's better, you can move on to that. Easy enough. You're not committed. You can move on to that until it completes. But if the rates get worse, which they have done this month, then at least you fixed at 4.39. It gives you that certainty. You kind of know, and you can get prepared and get things sorted to where they're going to end up. That's what I would advise you to do. And share that with friends and colleagues. I'm sure you know tons of people that have got a mortgage coming up this year. They're stressed because they've been reading the news, been reading all the articles about Armageddon with mortgages and stuff like that. This is actually way better than it was a year ago, but it's still way more expensive than it was 2 years ago, right? So that's what you've got to consider here. Anyway, let me know your thoughts on this week's rates. Where do you think they're going to end up? What's your predictions for next week? Are you going to apply for any of these? Let me know in the comments below. Do check out, if you haven't done already, the fundamentals of property investing. I'm going to link to that below. Every single day, new people are joining that, and it's basically, it will teach you how to source property below market value, how to get investors, what strategy you should be using. Should it be buy-to-let? Should it be serviced accommodation? All of that's covered in there. There's more than 100 lessons, and it's less than 50 quid as a one-off charge. So I'm going to link that below. Go and grab that now, and do check it out. Do check out all the other content on my channel, including that video up there.